And there it is. The markets are closed on this Wednesday, February 4th. Welcome, investors and traders. And boy, do we have a lot to talk about here today. The focus is still on the precious metals and the critical mining stocks. We'll get to that in a moment. But before we get into the most exciting news, let's bring on Nod so he can tell you about some of the other news that's coming out of the Nod Live news feed. So, Nod, why don't you bring up those items one at a time? And then remember, investors, we have room at the very end of this presentation to go ahead and answer your questions and even look at some of your ticker symbols. So don't forget to put those in the box down below. Go ahead, Nod, take it away.
Thank you so much, AJ, and good afternoon, good evening to everyone who's joining us. We so appreciate you taking time out to be here. Listen, the BLS, the Bureau of Labor Statistics, they've rescheduled the January employment report for next Wednesday, the 11th, because of the partial government shutdown, but jobless claims are going to stay on track to be for this Thursday. The U.S.-Iran negotiations, which were on again, off again, they seem to be back on again, which is why we saw some vol within equities and oil. So keep an eye on that as well. The U.S. plans a critical mineral price floor with Mexico, EU, and Japan. And we're going to get into that, but that has been kind of a boost to some of the names that we've traded in the past. But since our last session, AJ, last Wednesday, we have to talk about silver. We saw silver trade from 120 down to 74 and claw its way back nicely to start the week. I wanted to show this chart here, which pulls up the silver miners to silver ratio. With silver now down 30% from its highs and junior silver miners only down 16%, AJ, as you've been speaking, things are kind of aligning. So, AJ, with everything that happened last week and kind of the rebound that we've seen and kind of the shakeout of the loose hands and where we are now, what are some opportunities you see in like SILJ, which, again, I know our members have a position in, and things that anything outside of that? I know we are chock full of opportunity.
Well, you know, that again, it's the topic of conversation here on a lot of the financial programs. And just as a heads up, this coming Friday at I believe it's 12:15 or 12:30, they're going to have me back on Lindell TV to talk more about silver, and not just the metal itself, but what's going on behind the scenes with regard to the manipulation. And I said this before, and I'll say it again. I'm almost embarrassed to say that I was a member of COMEX for 10 years. And as the former chairman of the option floor trading committee in the silver pit, you know, I know what goes on behind the scenes. And it's gotten so much worse with regard to that manipulation that, and I know I'm sticking my neck out by saying this, but I think we're on the brink of seeing criminal activity. I'm not going to name names because I don't want to get sued here, but you could connect the dots and follow the headlines for yourself to see who the major players are. Now, the big sell-off in silver, as you can see here from my chart here of the silver futures, notice on the top left side of my screen here, that's the March contract, right? So let me give you a quick lesson on how futures work for those who have never traded a futures contract in your life. When you buy a futures contract, you obviously have to be buying it from someone who can deliver the commodity to you should you decide to keep that contract right till expiration. Well, in this case, COMEX is the facilitator of that metal. They will ensure that you get the metal if you hold the March contract. But guess what? They don't have the metal to deliver to you. So what they did is they pushed it down to get the prices low enough for them to cover the shorts, get what looks like silver, but it's actually paper silver, so that they can go ahead and find whatever they can to deliver it to the contract holders. I know that's a mouthful, but notice what's happening to silver. We're bouncing here, and we're bouncing quite nicely. In fact, it's up over 4% right at the close here, and it's still continuing because it's a futures contract. But, you know, with silver, even at the discount, and I'll say this, even at the discounted 30% price, the silver miners still have an enormous amount of profit margin right now. And the production crews that go and they take and they melt down the silver and process it, right, the refineries, they're backlogged by over a year. So if they're backlogged, that's telling you the demand is still high. If you look at what's happening with the critical minerals and metals, and Nod, you'll get to that in a minute when we talk about JD
Oh, yeah.
Vance.
Oh, yeah.
That's going to add longer term support to the sector right across the board, whether you're talking about copper, silver, platinum, and even uranium. You're still building a base here that I think money is going to come into and launch to the higher levels. So my forecast is still a lot higher than where we are right now.
Yeah.
I think we could see $200 to $300 an ounce silver, and I believe we could see that in the next 18 months. I know that's a far stretch, but look, we got this show recorded, and I hope people reference it when that time comes. We're hitting targets left and right, not just with silver and some of the other mining stocks, but as the market goes, the major market ETFs, not you know, because you track it each and every week with me, we're hitting targets left and right. And maybe we'll get to some of those charts here in a moment. And we got
Yeah.
Mark in the house there, chatting away in the live chat there. Thank you very much for that. Go ahead, Nod.
Yes, I know, we're great. I mean, AJ, people, I think it's important to remember where silver came from. I mean, just a handful of meetings ago, we were in the 30. So, I mean, it's had a heck of a run, and a correction is to be expected. So I'm glad we're here. I'm glad we saw that there's a floor in it. But listen, AJ, we can't talk about silver without talking about gold. I've got another chart here. Now, this graphic shows the last three big collapses and rebounds in gold, highlighted by the 2007 housing collapse, COVID in 2019, and then whatever they're going to call last week's collapse. But AJ, with gold hitting 5,500, falling back below 5,000, and now kind of back playing footsie with 5,000, what are some opportunities you're seeing in GLD, and what else? What's the bigger picture here for you with this work, with what everything that gold touches, would be it the dollar or anything else?
Right. Well, obviously, silver is the more volatile contract. Whether you talk about an ETF or a mining stock, you're going to see the volatility continue there. In fact, the option traders are loving it right now because front month or near term option expiration contracts are up there around 140% volatility, which means that for those who are selling options against long options, that's known as spread trading,
Right.
they're collecting a lot more premium now than they did last year, which allows them to pay down the cost of these spreads a lot quicker. Now, I'm still bullish on gold. I do hold that position as well in physical form. But as long as Peter Schiff keeps getting invited back to talk on Fox and some of these other networks, he's able to go back and have that "I told you so" moment. And he's been very right. His timing maybe it was a little bit too soon with regard to his calls, but I respect the fact that he's hitting his targets. And you could say you can't say that for all of the analysts out there. I mean, even Tom Lee, although I respect his analysis, he's taken huge hits in Ethereum, and the Bitcoin market is not very favorable to Michael Saylor either, who I think has lost about 20 or 25 pounds this week alone from stress. I'm not joking, but that's actually the situation in real time. So, yeah, that's what we're looking at here. But I think gold and silver are a great place to park your money. Not advice, just what I'm doing. I can tell you what I'm doing as a hedge against inflation, I think is right down the road, because they're still going to continue to hurt the dollar. And the lower the dollar gets, the more inflation we're going to have, because you have less buying power, obviously. Yeah.
Well, I'm seeing comments of people saying, I love this volatility. And, we said in our team meeting to kick off the year, and we've said on our webinars, that 2026 is the year of opportunity, which is because of volatility. But we also said one of the themes is manage your risk and take profits. So one of the things we talked about, AJ, from last week was Bitcoin. We're not, you and I aren't the subject matter experts, but I'm going to pull this up because today it's Michael Saylor's birthday. And he talked about, he said his gift that he wants us all to buy Bitcoin for him. Listen, I don't want to stomp on someone's grave, but he has reportedly erased a $47 billion paper profit in it, and is probably in hot water because we know his dollar cost average is right around 75,000. So let's talk about that volatility, please, with this, and then another volatile name in Nvidia, please.
Right. Well, listen, for any of the crypto traders out there, or those who are delving into Bitcoin, make sure you catch our Cryptex team. That's Matt and CJ. They do live broadcasts just like we're doing here now. And you have the opportunity to ask them questions. They are the subject matter experts here at StickyTrades. And because you have that access to them, I would suggest you go on there and ask them questions, and even ask them about Bitcoin related stocks. They're very fluent in the technical analysis, and they've been spot on with calling Bitcoin as well. Now we'll get to Nvidia here in a second, but I just want to show you what I'm seeing in Bitcoin is that we are at a very critical support level here as I draw that line as straight as I can across. And this is known as a role reversal. You see the resistance area back here was broken on that gap up, and then it pulled back and is now holding as support. So we're right at that level. And the good news for this is a weekly chart, by the way. The good news is that the volume is still lower than it was last week. Now we still have 2 more days, so I'll have to see if that volume holds. But there's a gap above the market right there on Bitcoin on that contract. And I think we could see some pivoting here. And so I'm not going into a raging bull market here, but I think we could see a nice little bounce, a correction perhaps to the upside. And you've got the moving average up there just under 97,000. So I think there is a lot of opportunity for traders that are trading the Bitcoin related stocks. Just to quote Matt and CJ and what they talked about on Monday is they were looking at Riot. Now here's a fairly inexpensive stock that you could trade, and they have a good selection of options. See how see the shadow right here? Again, getting into technical analysis because I just can't help it. It's staring me down here. See that shadow underneath that candle? That tells us that the sellers tried to push Riot down, but the buyers pushed them right back, and because the sellers were not able to keep them at the lower level. And so now we have this. If we pivot from here, and I think we could, you'll have 3 successive lows that are acting as support that are going to be higher lows. And now you have highs up here after the recent high back in January being a higher high than the previous high. You've got the potential for a stock like Riot to go from 14 to 21. So, you know, again, that's a forecast that I think is very realistic to get a 50% move in a stock like Riot. So for traders, this is an absolute field day. And again, looking at the options, sorry, I got to calm down a little bit because I get really excited about this. Because
you're good, man. You got this.
Listen, if you're brand new to this channel, let me tell you something right now. You got to plug in to our member base and try the 15-day trial. We don't have any strings attached or games that we play at all. Ask some of our members how well they're doing, and they'll tell you the God's honest truth here. But looking at the March options just in Riot, see how tight these bid-ask spreads are. You know, so for someone even with a small account, you can get involved in that and have a fun time as long as you're following the charts. Now, you mentioned Nvidia. Was that right? Is that what you're looking at? No.
Yeah, I mean, just because it has also been volatile. It's been in that channel you talked about, but it has a downside bias, and I think a lot of people are watching it.
Well, you know, the volume is slightly lower today than it was yesterday. And again, for those that are brand new to the channel, you have to see these diagonal lines. You see these back here? Those are my target lines. So when any of our members ask me to put a target out on any of their ticker symbols, I do that and I forecast. And you can see that since October, 100% of the targets that I've established on Nvidia, 100% have hit. That's not a guarantee they're going to continue to hit a 100% hit rate. But if you look down below here, you got a key support level as well, right around the 166 to 170 level in this area. So if we get a drop in volume tomorrow, and I think we will, you're most likely going to see this oscillator down here, which is a CCI. You're most likely going to see that start to pivot up. And that will, again, lead to a buy signal for those that are looking to take a new long position in Nvidia, whether they're investors or traders. This is a great trading stock. Again, you option traders who are spread traders, this is a great candidate. We've traded this before very successfully. It's worked. And I think it's going to offer a lot of new opportunities in the future as well. For sure.
AJ, you talked about sticking your neck out. You do that a lot, and I appreciate it. You know, but you won't toot your own horn. But last week, all of your major market ETF publications or targets have hit. I wouldn't mind if you have a chance, would you go over a couple of those? Because I just want people to see what you said and the result of it. Because again, this is not easy stuff with this volatile market. is producing opportunity for our members. And I want people to see that.
Well, thank you. And thank you, Bob. Bob in the chat there. You're a member, and I really appreciate your comments there. For those folks, go read that chat that Bob just put out. But yeah, last Thursday, which is when I did the weekly market report, I put out this downside forecast, and the very next day on DIA, it hit. Now tomorrow, after 1 o'clock, between 1 and 2 o'clock, I'm going to post the next weekly market report while the markets are open. So that way you have the rest of tomorrow to trade against that information, and also all day Friday to trade if that's what you want to do using these charts. And so we hit that right away. And we're now at an area of resistance on the diamonds. We'll have to see if we break out tomorrow or whether or not we hold. Now, IWM was in the same boat where on Friday we came right in and hit that target right down there as well. Now, right now, I don't want that line to hold there. Right now, IWM is not looking very bullish on the short term. In fact, I think we could see continued pullback into tomorrow, but I'm not going to draw any target lines again until tomorrow's report. But here's the big story in the Qs. The Qs took a little while before that target hit, because I had that one out the week before last with a downside target there, 617.11, and we finally hit that downside target yesterday. And look at that big red candle. There's a little bit of a shadow there that could tell me that the buyers are showing some signs of life. So I can't put my target on now, but I can tell you where I'm leading into tomorrow for those that really can't wait. I think we're more likely to rally on some kind of a bounce in the tech sector than to go lower and possibly break out below the December low here. That's from December 17th. You see that big red candle? So that's going to act as a support level. The low from that day was $600.28. Today's low was $600.47. So we were 19 cents away from that low, and it bounced perfectly off of that low. So I think we're more likely to bounce in the Qs for those who have tech position. And then we get into SPY, which is more or less the ETF for the S&P, and we hit that target yesterday as well. Now I'm leaning more to the upside for tomorrow and also into Friday, but don't jump the gun on that. Wait for a pivot if you're looking to take a long position. Think there's more buying action coming in here as we look at the sellers start to wane down. And then, of course, the SPY is connected to the VIX. And look how perfectly we hit that upside target. My upside target on the VIX was $20.42. Now, for the folks that are trading the VIX, I started putting upside targets in back here on these lows from, what's that date? That's January 16th. So you got to understand that the VIX at that point was trading right around 15 and a half. Here it is hitting targets up there around $20.42. So you've got a 30% rally in the VIX. And again, for short-term traders, especially those who are using options, a 30% move in the VIX from that low could mean tremendous profits in the option markets because you're leveraged, obviously, for a lot cheaper money. And if you do it right, you have a lot less risk. But you got to know how to follow the charts for sure. Yeah.
Well, thanks for that. And just for those that are new to us, every Wednesday at 6 p.m. Eastern, AJ fields and forecasts at least 50 of our members' ticker requests live. So please grab that free trial and please join us. Listen, AJ, before we get to some of our member requests, I do want to touch on the critical minerals because I do think this is a bigger story. So I've got a little graphic here. It shows that rare earth minerals have thrust themselves back into the news with this dearth of headlines that we've got, just like today from Vice President Vance, who hooked up with EU, Mexico, and Japan on putting in kind of a floor group. So AJ, can you look at maybe CRML, Corning, and USAR and whatever else you can talk about? Because again, I think this is in the early days of something that's going to be pretty big.
Well, I could say this without giving too much away for our members who pay for the service, but we did take a new position, CRML, in the option side of the equation. And what I told them was this one looks very much like a cup here from this high right here. I don't know if you can see that little pivot lower, but this looks very much like an elongated cup. And for those who follow a cup and handle, I'm waiting for the handle to complete. But a lot of times I'm trading high probability trades on the completion of the pattern. So while I'm not jumping the gun and trying to trade a breakout that has not yet occurred, I'm trading the completion of the handle.
You did the
And then
exact same thing with silver, AJ.
oh, and it worked perfectly,
Yeah.
except silver. That was a 45-year cup and handle. And we
Yeah.
broke out at 50. What happened? We went to right to 120 and in a very short period of time. So I think the critical this company, by the way, is Critical Metals Corp. And it's another cheap stock for people that don't have a whole lot of money in their account. You could trade shares on that. You can go into the option market if you're qualified. But you look at Corning, which is GLW, and here's one that has already broken out of what I would call a cup formation here and a handle. It's already broken out. That's not textbook, by the way, but that's what it looks like. And now I have a downside target on Corning around 96.78 because of this gap down here. Now, when you look at Corning on a weekly chart going back 3 years rather, you see these long shadows on the top. So that's a sign that the sellers are starting to come in. Whenever you see long shadows above the candle, that tells us that there's negative, selling pressure coming in. So when you look at the weekly, you could understand that there's my target right there. It's very reasonable to think that that target could fill. Now, if that target does hit, I think we could see another bounce from there, but I'm not ready to buy Corning just yet. What are you looking at? AST? What was the other one you were looking
I gave
at?
you a USAR. That seems to be another liquid one that people like to trade.
Yeah, now this one looks a little overbought on the weekly, right? And you got to look at the fundamentals on this one. This company has really, they don't have any earnings to post here. You got a negative PE, but you got to watch this one because this one has a lot of volatility. And today's candle was a bearish engulfing. 80% of the time when you see that show up, you generally see lower prices. Again, 80% of the time. That's not 100%. But the good news is for anyone that's long this or think about getting long this one at the cheaper levels, there's your cup. Here's your handle. See, there's your breakout. Here's your target hit right there. So if we pull back to this original breakout point, I think you can see a nice little bounce there. So I do have this one on my watch list, but we're not quite ready to get in on that one unless we see the technical signals start to percolate a little bit on the buy side. So that's what we're looking at on USAR. Good one.
That's great. And a lot of those are really fun to put in our automated 7-point checklist because again, it gives you a quick scan of your 7 points you look at for buys or sell signals. And I know our members have really enjoyed using that. Well, listen, AJ, time is flying. Do you want to take a couple tickers from our members?
I'd love to. I love doing that. You know that. And then we continue that at 6 o'clock. Sure.
Yes, we will. You're going to have some water. It's going to be a rapid fire, no pun intended. Rick would love to hear on Bank of America. I know the financials have come and gone with regards to earnings, but what do you think about Bank of America, please?
Well, here's another one. It's done a pretty good job hitting targets. This upside target that was established earlier in January hit perfectly. Now, remember, I was looking at this gap filling. That's why I drew that horizontal line right there. Now, I often throw out that 80-20 rule. And again, for the brand new folks who have never seen a chart in your life, that's known as a gap. It's basically a space on the chart or a price void. 80% of the time, those fill. And then after they fill, there's an 80% chance that the price will drop after the fill. Now, we haven't seen the pullback yet. Now, for the record, I guess we could put a price target on this one, and I will. I'll go a little bit lower on Bank of America here. So for the audience on this live broadcast, I'm going to put a target of 53.90. So you're talking, about $2.50 to the downside. And we need a drop in volume. So if you get a drop in volume tomorrow, it'll break up all this green. And even without the drop in volume, look down below. Let me expand this for you. The CCI, which is my absolute most favorite indicator, is already starting to pivot right there. Now, that's the highest reading it's gotten to all year or in the last 12 months at least. And so I think that indicator is telling us, watch out below. So the way you would use that if you're long Bank of America is you would most likely do yourself a big favor by putting some sell stops below the market. So that way, if it drops, you're generating cash, and that cash could be used to buy it back at a lower price if, in fact, you get a bounce off of the 20-day moving average, which is going to act as support down there. So that's what we're looking at right there. And I got the countdown clock in my face right now. We're coming into 4.5 minutes.
I know, we're flying.
Yeah.
Paul is looking for Goog, G-O-O-G, please. This has been another mover.
All right, this one obviously is a volatile stock, but oh, here's another one. Look at that. Isn't that beautiful? Oh, so I didn't check this one off on my target hit. I'll have to do that. So we had a downside target of 330 set for Google. I still call it Google, Alphabet Inc., whatever you want. They never should change the name, in my opinion. But it's branded at Google. It always see how branding works. It's in my brain. Not going to get away. Anyway, we hit that target perfectly, but look at the volume increasing here. Now, this is a pretty high price stock. So what I'm going to do is I'm going to go just a little bit lower. And not if we can get one of the record keepers to keep an eye on this one, and Bank of America, we'll look to see what happens with these next live broadcasts. But I have a downside target that I'll put on. Let me round that down a little bit, get rid of those pennies. I'll go to 326. All right, so you got about $7.34 left on the downside, and you got the sell signal on the stochastic. You see that? The sell signal showed up yesterday on that CCI, that commodity channel index. See how accurate that is? And when you look at the past sell signals on the CCI and here as well, see, there was a sell signal. Here is a sell signal. Now we have a sell signal. Look straight up at what's happened to the stock after those sell signals showed up, right? So there we go. Is there a chance we'll hit that downside target? I think so. A high chance at that. So that's Google on the charts.
Yeah, and I'm sure you'll be asked again at 6 o'clock on that one. Ryan's asking about FIG, please. FIG. We've covered this one in the past, but I think this is one we haven't visited recently.
That looks like a kamikaze pilot trading stocks right there. Is FIG or RIG?
FIG, FIG, please.
I wouldn't touch that one with a 10-foot pole. I mean, that just is that line right there. That's not support. You know, that's the bottom of the chart. I don't say that jokingly. That's zero. That's the only support this one has right now. I would not be touching that at all. I mean, you might see a little bit of a bounce here. I'll go out on a limb and say you might get a bounce because of the drop in volume on the way down, that first green candle, but you're not talking much, $23.86. Well, even then, I mean, you got better than what, 10%. No, you got about a dollar and change to the upside. So
not bad.
Almost 5% bounce. And then I think lights out for that one. I don't see any daylight for that for a long time, unless they come out.
All right, well, how about lights on for Brad Davis and AMD, please?
AMD, and this will be the last one. Look at that. Holy mackerel. almost slipped. But look at that. Look at that gap fill. Isn't that perfect? Remember what I said, 80% of the time gaps fill. And then the other time it reverses a lot of the time after that. So I think this one still has some more downside to it. And in order to find the support on this one, I got to go out to the weekly chart. And there's another weekly gap. Oh, my goodness. I wouldn't be long that one for that very reason, is that one has the potential to drop all the way down to 170. I'm not going to put the target on that one because that's a far stretch. But that open gap is looking to me like it wants to fill. And all the oscillators down below are making a hard pivot to the downside. So what the charts are telling you, not me, by the way, not me, the charts are telling anyone who's long that stock, put protective stops in place, number one, or learn how to collar a position. That's learning how to sell options on the call side to go buy insurance on the put side. I'll leave it at that because now I'm crossing the line into advice. I'm an educator, Nod's an educator. We deliver this content each and every week. And with that, Nod, we didn't run out of ticker symbols. We just ran out of time again. And thank all of you. We got, look at the numbers of people coming in on this live broadcast. Thank you so much. If you like what you see, subscribe to our channel. Join us next Wednesday. And if you want to try the trial membership, like I said before, I don't know if there's a scan code down there. I think there might be right over here. Go scan that. and come join us on some of these live webinars. We have a great time, and you can ask any of our members how they're doing, and then you're going to have a lot of thumbs up right there, folks. So you have a good rest of the day, and we'll talk to you on the next weekly market report. Take care.